Hello, good morning, Trade Pros. Hope everyone's having a great day. This is George Papazov, Trade Pro. Is the morning market update for Friday, July 27th of 2018. Boy, this week flew by, and I'm sure you guys will agree. We have a really big morning market update for you today. We're going to rehash or cover some of the earnings that have come out in the past 24 hours. We're going to have a gander at the markets and an overview of today's economic calendar. We just got a big print, advanced U.S. GDP, and we're going to talk Twitter and also Tesla. All right, one man is short Tesla, and the last time this man was short, he called the crash of the financial bubble. All right, so let's have a look at this. Let's get started. First, we're going to take a look through earnings on the past 24 hours. All right, Amazon's up 3.2% on earnings per share beat and also growth in their cloud platform called AWS, Amazon Web Services. American Airlines is up 4.8% after they pledged to take aggressive action for. In addition to that, we have a lot of companies actually on here. I'm going to cover the main ones. You have about over 15 of them. Intel's down 5.7% on soft data center sales, and data is a big part of their revenue model. MasterCard's down 3.2% after raising its expense forecast. I can't talk today. Its expense forecast. I've been speaking patois last couple of days, so now it's just kidding. I have not. Starbucks is up 0.6% after increasing comparable same-store sales. And for the most part, you got a mixed bag of nuts in earnings, with most stocks reporting positive gains, but the key ones tend to be down. All right, so the Amazon beat comes at a welcome opportunity for the market, as investors were really freaking out about Facebook yesterday. Facebook was down 20% on the open. It was down the most amount in one single day for any U.S. stock in the history of the market. So it was a historic day from Facebook yesterday. All right, let's grab our passports. We're going to take a tour around the world. In Asia, Japan's up 0.6%. Hong Kong's up 0.1 of a percentage point. China's down 0.3. India's up 1%. So modest gains here in the Asian market. While in Europe, London's up 0.6%. Paris is up 0.3%. Frankfurt's also up 0.6%. And that modest gain in Asia has continued to build momentum and become a little bit more of a rally through Europe. In the United States, however, equity futures are mostly flat, with the Dow and S&P up 0.1 of a percent, while Nasdaq's up 0.2 of a percent. So that momentum's faded in the beginning or the early stages of the U.S. day here. Be interesting to see how it leads up to the U.S. Open at 9:30. All right, crude oil is down 0.3 of a percent. Gold prices are down 0.6 of a percent, and Bitcoin was down 3%, back into the upper 7,000s after the SEC rejected the Winklevoss twins ETF. All right, remember Tyler and what was the other guy's name? The Winklevoss guys that sued Mark Zuckerberg for taking their code that he apparently wrote for them in Harvard University. Those two guys. My favorite line from that movie, and I don't know if this is true, is he said, "I'm 6'4", 240 pounds, and there's two of me," because they're twins. It was good. So they were planning to launch an ETF that trades Bitcoins, which would make it easily accessible to retail investors. At this point, if you want to buy Bitcoin, it's not easy for your average everyday person. There's a process to follow. You got to open up an account with an exchange, etc. Whereas if it goes to an ETF basis, then any investor with an open brokerage account currently could just go in and buy it. It'll make it very easily accessible. However, the SEC's rejected their ETF proposal. It would have been called Coin. They have concerns of trading reliability and volume data, basically. What they said was the Chicago Board Option Exchange, CBOE's attempt to launch their own ETF that was rejected. They said that launch failed to show that there was a resistance to manipulation in the market, and that's why the SEC did not feel comfortable approving these ETFs. This wasn't anything new. There wasn't a big shot of it being approved, but nonetheless, the Bitcoin markets take down a bearish note. All right, let's talk about the biggest update of the day. It's the advanced GDP number. All right, there's 3 releases of GDP, and the advanced one is the earliest and most important for the market. So the stock market, excuse me, was on pins and needles waiting for this number. Donald Trump said it was going to be a huge, terrific GDP, huge. But here's what happened. It came out of 4.1% versus an expectation of 4.2%. So it missed the expectation mark but you have to understand there were really strong expectations baked into this. It's still twice or almost double. Actually, it is double higher from last quarter's 2.0%. And you would say, well, holy crud, that's a really good number. However, let's break that number down. It is the highest GDP quarterly since 2014. All right. The whisper number was somewhere in the low 5%. Some analysts are expecting as high as 5%, some as low as 3%. We got in the middle of the range, which neutralizes its impact a little bit more. All right. Here's some positives. Personal consumption was up 4% versus the previous quarter of 0.5%. That's a really good number. Consumption's 80% of the US GDP. So having such a strong beat is very positive for GDP. That was a good thing. All right. Here's the interesting part. You might be wondering, if GDP came out double than last quarter, how come this market's not rallying? And how come it sold off initially only to recover back up on this GDP number 830? Here's why. The driver to this GDP surge, and not many people are talking about this, was the rush for the United States to export soybeans. All right. And that was, they wanted to export one single batch or export as many as quickly as possible to China before China slapped the tariff on them in retaliation. So this surge was actually produced by a one-time event of exporting before the tariffs. All right. We had the biggest export growth in GDP since 2013. And when you look at that, that neutralizes the impact of this bullish number. Investors and traders feel a little bit less excited about this GDP, knowing that the next quarter might be a fallback number or blowback from this one-time event. And we might get back into maybe 2.5%, 3% range. So it's a strong number. Donald Trump will probably tweet congratulating himself on this feat and accomplishment, because he did say he's going to have a strong growth in GDP. However, I'm here to tell you as a trade pro that when you dig into the numbers, yes, it's positive. Yes, traders are going to feel a little giddy on a Friday at the end of the week. We may rally here, but in the long run, this GDP number is a one-off. All right, it's an export growth number. This is something you have to consider, and it makes the next quarter that much more important. All right. That's GDP. At 10 a.m., we have consumer sentiment. 1 p.m., we have Baker Hughes rig count, because it is Friday. That's going to impact oil prices. Now let's talk about the other part of the heading that we captioned here in the YouTube. We said Twitter stock crashes. It's down 17%. Here's the interesting part. Twitter has sort of been a stock that has been punished by investors. Even when they do decent, investors have really high expectations for it. And I don't know who tweets anymore. Could you guys comment on YouTube below if you still actively use Twitter? I know that a lot of Twitter's, that's a no from the fiance here, who's in social media and marketing. So that's our business. And she says no. I've never used Twitter. I've used it to read stuff, but I don't really use it to publish content. And I'm not an active user. Here's the interesting part. Their earnings per share was 17 cents versus 16 expectations, so they beat. Revenue of $711 million on the last quarter versus 697. That's a beat. So we had beat of EPS and earnings per share. Why did Twitter drop 17%? That's a massive drop considering so far everything's green. Here's why. There was a slowdown in U.S. ad growth, with revenues only up on the ad side 9% quarter over quarter, and that's a decline. All right. That means advertisers are taking their money elsewhere outside of the Twitter ecosystem. So if you're not using Twitter, guess what? Advertisers aren't going to be using it either, because they're looking for you. So basically that's kind of what put some downside pressure. And this is what really did it. Monthly active users, or MAUs, were 335 million on Twitter. Up about 9 million year over year, but down 1 million from the previous quarter. So the trend is a flattening of user growth and even an early stage of decline in Twitter users. Here's the question I'm going to ask. How many of these monthly active users are bots? All right, because all I see on Twitter these days are bots, reposts, whole bunch of spam, fake users buying followers. Imagine buying followers. Buying followers on social media is okay, but buying friends in person is cheesy. So anyways, point I'm making here is not good. The monthly active users are dropping and declining in Twitter. And I think that, 1 second, I got to plug my laptop in before the battery dies. All right, we're back. Investors are not impressed with this number, and what that's leading to is a sell-off. But I think more importantly, the reason Twitter's down so much today is the fact that we're still scared from what happened to Facebook yesterday. All right, and on Twitter, this is not a terrible earnings report. It could be an early buying opportunity in Twitter just for the recovery. I'm not saying buy and own this stock. I'm saying if you want to trade it, you can fade this low by waiting for the open, drop a little bit lower when volume weakens, try to grab it long on some calls or the stock itself, and just get it to ride back up some of this drop. If it goes up 7, 8%, that's all you need. You're not there to buy it as a trade and end up being an investor for 30 years. You just want to take this momentum and see if the market continues upward, the broad market, if Twitter could catch up quicker on a trade opportunity. All right, last but not least, Steve Eisman. Do you guys remember the movie The Big Short? Reese, do you remember The Big Short? The movie? Yeah. Did you like it? Oh, Reese loved it. Steve Eisman, that's the same guy. You guys probably remember the movie as well, The Big Short, is now issuing a report that he's short Tesla. And this is going to get a lot of attention. He's official. Yeah, this might be the next Big Short. But here's what he said. He said, Elon Musk is a very, very smart man. There's two varies in there. But there are a lot of smart people in the world. And you've got to execute. He's got execution problems. That's pretty much what he said of Elon Musk. Acknowledges brilliance. However, he's saying executing the business model is not working. And so he's issued a short notice, and he is probably at this point already short. Here's some reasons that Tesla has some issues. Look, I'm positive on a company trying to make an electric car. I love that idea. I think Teslas are sleek, they're modern, and I'm even going to say sexy. And I hope the fiance doesn't get mad at me. I find the Tesla sexy. She's not listening. Perfect. I think they're good-looking cars. I considered buying one. I was very close. But here's a few issues. Tesla's had some production quality issues. There's been some reports of literally thousands of Tesla Model 3s parked in California in the desert, just rotting away. This was after they fought really fast to meet their 5,000 production quota for the week, and they did. However, there's been a lot of talk that a lot of these cars came out with lower quality in favor of producing more quantity. And that's never a good long-term decision. Short-term, you're going to get some high fives. Long-term, that's not the way to run a business sustainably, especially not when you're charging such a premium for electric cars. All right. Also, on that, their cash deposits have been refunded. A lot of future car owners have been asking for their refunds back. That's created a lot of cash flow drain from Tesla. They've had massive cash flow burns. Since December of 2011, they've only had one positive cash flow quarter. All right, and that's sort of a little revealing. And I'm giving you the reasons that Steve Eisman is looking for the short in the company. Execution, and then some of these numbers as well. But remember this, Elon Musk has managed to lead this company higher and higher despite a lot of debate, despite a lot of people questioning him, his leadership, and it's still managed to go up and continue to trend higher. It has sold off since, but the question is, where do we go from here? And I wanted to present to you the case for the short, but I could also tell you this, competition's heating up in the electric car sector. So it'll be really interesting to see how Tesla does. And I think that the next step in the entire auto industry is automation. So autonomous cars, and we've seen the news on Tesla's cars hitting guardrails, taking over the autopilot, smashing the brakes for no reason. Some issues to work through. So I'm a positive person. I don't like to see any company fail because investors lose money. But I'll tell you this, Steve Eisman is short Tesla, and that means whatever that means to you. All right, guys. That's the morning market update for today. It was a little wordy and verbose, but I've had a cup of Java. This Jamaican coffee is really freaking good. And so I'm going to say goodbye so I can go drink more of it. You guys have yourself a great day. Manage your risk. Have a great weekend. This Saturday at 3 p.m., we have a YouTube video coming out, and Sunday at 3 p.m. as well. So I encourage you guys to watch that. If you subscribe, please hit the little bell with the notifications. That way you'll know the second we have new content that comes out, you'll be alerted. And I'll see you on Monday morning at 9 a.m. back in the home office with the boys. Victorio Markey. See you guys on Monday, 9 a.m. We're back to our morning market updates. Thank you guys for tuning in. Look for a little bit of a rally starting this last day of the week, and look for low risk opportunities to enter your trades. Look for sell-offs to get in. for a long opportunity. It's Friday, and I got a feeling we're going to close on a really strong bullish day. Start bullish, and then if you see signs telling you that markets are going down, quickly reverse to the short side. Manage your risk. Trade like a trade pro. Have a fantabulous weekend. See you on Monday. Goodbye.